Why do you guys take on capital raise nowadays? You know, I know that a lot of on the multifamily, especially, being a lot of investors being burned out, a lot of investors being, I myself and Dan and I with our firm invested a few deals in Houston and we lost 100% of capital. But I want to say that when there's a good operator and you're conservative now, there's there's very good chances. So, what you guys take on that right now?
Yeah, gosh, I think you hit it on the head, Neander. Is like if you were buying in 21 and early 22 at the peak, and you're not now, or you're not in the next 12 months, you're likely going to miss a huge opportunity because asset prices in 21, early 22 peaked. It's easy to look back. We can all see it now. Hindsight's 2020. And you've had this 25 to 30, 35% pullback in pricing. And the only way you can, well, the only way we're buying right now, which is great, is with low leverage fixed debt.
Yeah.
And if you can make your deal work now with low leverage fixed debt, you have so much less risk on the table. It's unbelievable. Whereas back in 21, we're all, buying with bridge debt and you're leveraged to 80%. You're financing all the capex, and then obviously interest rates run, and those are the deals that are coming to market, right?
Yeah.
So if you can be in a position to be buying these next 2-3 years, I think you've got a lot of wind at your sails. Like you said, though, get with the right operator, get in strong markets, get a great business plan in place based off of primary data, what's actually happening in the market today, and build your business plan off that. And if you can do that, I think you've got a really good chance of making some good money for investors.
Well, and I think to your point, Neander, you said a lot of people have, maybe lost money, or they've lost a portion of their money in these real estate investments, or they've had capital calls, and you have to look back and find out what's the reason for that. And most likely it's because they had bridge debt,
Yep.
Floating rate, variable rate loans, and that's the reason why, they lost capital or they had a capital call. So going forward, if you're buying a deal that has a discount of 30%, you're putting fixed rate, product or loans in place, you're buying in a pent up demand area, you have a bunch of capital for capex and liquidity for after you close the deal. The likelihood of doing a capital call or getting a capital call or losing your capital
Sure.
is very, very minimal. And like Dan said, I mean, it's just a phenomenal time, in my opinion, to jump into the market when you're, towards the bottom.
Waking up to success, now we getting it started. This is the real grind. Everything you've been wanting, building an empire, no question. Talking about real estate, investing, making the millions, no stopping. While we sip on gourmet coffee, the real grind. This is the real grind. Let's go.